Hey, to the mic here. So I'm going to give you a quick video going over what is a fair value gap. So what is it specifically? So how do you find, so basically what a fair value gap is it's an imbalance. That's it. It's an imbalance. Okay. So how do you find these imbalances on your chart? These imbalances in price? Well, what you need to understand is it's made up of 3 candles. Okay. So you're looking at 3 candles. So for example, here is a fair value gap. I'm going to draw it on here for you real quick. So when I say 3 candles, 1, so look at my cursor. Look at where my cursor is. 1, 2, 3. You're using 3 candles to find the fair value gap. And what you want to see is this. So I'm going to draw it. You're going to take the bottom in this, or for this example, I'm going to take the bottom of this first candle to the top of the 3rd candle. So boom. Again, 1, 2, 3. 3 candles. 1, 2, 3. 3 candles create that fair value gap. And what you want to see is, notice what occurred in here. Notice that there is no retest. There is no retest in here. There's no wicks, nothing. It's all body. See that? It's nothing but body in here. That is an imbalance. Okay? That is a price imbalance. The selling right here was so extreme that it didn't give sellers any chance to get all of the, or let's say smart money. Okay? Because dumb money, they ain't thinking like this. All right. Smart money didn't get a chance to get all the shares that they wanted up at these prices. This created an imbalance. So what do you think is going to happen, or a good chance going to happen, when price returns and feels that imbalance in price? Sellers are going to do what? Smart sellers are going to hammer it. They're going to hammer it even more. Okay. Once this imbalance feels. So it actually goes both ways. So I want you to understand this. Once a fair value gap gets filled, you'll get some really nice reversal opportunities off of those fair value gaps once they get filled. But here's another key thing you want to note. Price is going to be drawn to fill those fair value gaps as well. Okay, so you'll get nice reversals once they fill, but also we know that price is going to be drawn to fill those levels. So this was created to the downside. Boom. We now know that, so for example, here's a way you could have played this. 15 bucks. You know what about 15 bucks? It's hold number support, right? So you could have grabbed this off hold number support. Do you see this fair value gap that was created? We already know price is going to be drawn to fill that fair value gap. You got your support. You got your fair value gap. You know price is going to be drawn to fill that level. You could have looked for a reversal up into that fair value gap to get filled. Again, that's just one example. And then obviously, as you can see, once it filled that imbalance, price sold off. But yeah, that's the gist of it. So 3 candles, remember, 3 candles. 1, 2, 3. You don't want to see any retest. You want to see an imbalance inside of that. So you see once this candle closed. So I want you to take a look at this 940 1 minute candle. Once that closed, there was nothing but an imbalance in here. See, it filled some of it right here. So this closed, you got a little rally inside of it, but it didn't fill all of it. It's going to want to fill all of it. Okay. These fair value gaps, they will, I repeat, they will get filled. I can't tell you when, but they will. Okie dokie. So let's move to, I'm going to use an example of one I hit the other day in the Forex market. So, all right, so I'm using this because this is actually one that I hit. There was other components that went into me taking this trade, but I'm just using, this video is specifically going over fair value gaps, so I'm not going to go beyond that in this video. We're focusing strictly on fair value gaps. All right, so by the time you get done with this video, there should be not a shadow of doubt in your head that or what a fair value gap is. All right. So this was a trade that I hit. Remember, how many candles do we need? So answer among yourself. How many candles do we need to make that fair value gap? You need 3. 1, 2, 3. 3 candles. And what do you notice inside of that? No retest, right? Notice how there's nothing but candle in there. There's price going to come back and retest that level. I know you see this, you say, but didn't it retest it right here? I want you to focus right here. These 3 candles, okay? Here, let's see if I can go to the, all right. So focus at the right of my chart. Focus to the right of my chart. Don't worry about none of this crap. 1, 2, 3. What was left inside that? Nothing but candle. That represents an imbalance. All right. Now, what do we know? For one, we know that price is, so if you're a short seller, this is really helpful as well. If you're a short seller, you know that price is going to be drawn. It's going to be drawn to fill that fair value gap. It has to fill that imbalance, has to do it. Now, like I said earlier in this vid, when it does it, that's, it could do it a week from now, it could do it a month from now, but it's going to do it. All right. That's why it's really important to use other concepts in conjunction with this. But yeah, so we know price is going to be drawn to fill that fair value gap, but also once this fair value gap is filled, once that imbalance is filled, good chance you're going to see some sort of reversal off of that level. This is a pretty big imbalance. Okay. No retest, nothing but candle. See that you take the top of the first wick to the bottom of the third wick of the third candle wick, and you want to see nothing but an imbalance there. You don't want to see price come back down and retest it. Let me see if I can find an example of what wouldn't be. So look right here. This is an example of what wouldn't be a fair value gap. So take 1 candle, 2 candle, 3 candle. See that? 1 candle, 2 candle, 3 candle. Drop from the top to the bottom. What do you notice? It's filled it, right? There's no imbalance in there. See how price wicked down into it? It's balanced, okay? There's no fair value gap in there. You're looking for imbalances. Alrighty. You actually had another one right here. See that? 1, 2, 3. That's a fair value gap. See that? Nothing but candle in there. And then it filled it completely on this large move higher. So again, 1, 2, 3. Top wick, bottom wick of the third, imbalance. So this is the trade that I hit. Boom, came down. What happened? Price just completely slammed lower and completely filled that fair value gap. All right. Build that fair value gap. Also trade down to an order block, but like I said, I'm not gonna get too sidetracked on other concepts. Trade down to that fair value gap. And what happened? Look at that. You can see just got a consistent move higher. So that is a fair value gap. Now, like I said, you could go through this chart and you look at them, you'll find all kinds of fair value gaps, which is why it's important to implement other concepts. But this is a key component to my trading. Key component. All right. Is this a fair value gap? I want you to answer among yourself. 1, 2, 3. 1, 2, 3. These 3 candles. Did it create a fair value gap in there? It sure did. So take the bottom to the top. It's not a very big one. 1, 2, 3. Nothing but candle. No retest. Nothing. Pure candle in there. That's an imbalance. It filled that imbalance right here. What did I tell you? Price. For one, price is going to be drawn to fill that fair value gap. It's an imbalance. Price is going to be drawn to fill that level. So if you're a buyer, even when it creates this fair value gap to the downside, if you're a buyer, you can use your support levels to buy off support or to buy off of key level looking for it to fill this fair value gap because you know price is going to be drawn to fill that level, right? So that makes for a really good profit target. And if you're a short seller, you know that it's a good chance it'll give you some sort of selling opportunity once that fair value gap fills, which if you're a scalper, then you can see it did pull back off of that level. There's an opportunity. What about this? Is this a fair value gap? 1, 2, 3. 1, 2, 3. It is. Now, it's not a very large one. Your large ones are going to be better. The larger, the better, but you had ones because you can see it pretty much completely violated that level. You didn't really get any buying off of it. But yeah, that's still a fair value gap. 1, 2, 3, nothing but candle in that little tiny pocket right there. It's a really small one, but it still is a fair value gap. All right, let's take a look at Apple. So doesn't matter if you trade Forex, doesn't matter if you trade small caps, doesn't matter if you trade large caps, doesn't matter if you trade crypto. It does not matter. This is in every single market that trades. All right, it's everywhere. Doesn't matter what you trade, you can use this. Okay. Look right here. Perfect example. Fairly large one, fairly large fair value gap right there to the downside. See that? 1, 2, 3. 3 candles make the fair value gap. I repeat, 3 candles make the fair value gap. 1, 2, 3. Draw it from the bottom wick of the first one, in this case, for this example, to the top wick, to the very top wick, not body, to the top wick. See that? Top wick. Nothing but body in the middle. That's what you want to see. That's a fair value gap. That is a price imbalance. Okay. Now, what did I tell you? Once that fair value gap is created, price is going to be drawn to fill that fair value gap, which or really did not that long after and after hours the other day. But also once it fills, you'll get some really nice selling opportunities off of it. Now look to the left of your chart. What do you notice right here? You got another one, right? 1, 2, 3. What do you got in between that? That's a really large fair value gap. And like I said, the larger, the better. More significant, the bigger the imbalance. See that? Nothing but candle. No retest, nothing. See how price kind of chopped around down here? Kind of wicked back and forth. You didn't have that here. What happened? It's a strong move higher. All right. Smart money, deep pockets. When it comes down back down to this level, they're going to want to do what? They're going to get more of their position in, right? So, and that's exactly what happened. Look what happened once that filled. Huge rally up. Huge. And if, for you short sellers, maybe you went short up into resistance. You know that this is prices going to be drawn to fill that level. You could have took it down into that fair value gap. Okay. See that? Previous day resistance up there. Extended move up into previous day resistance. Also pre-market high resistance. Look at that. Easy short down into that fair value gap. Or for you option traders, you could have took puts up here and took it down into that fair value gap. So really, really simple concept, super easy to understand. I'll pull up a few more examples just to make sure everyone is on the same page, everyone understands it. It's not a holy grail, obviously. And like I said, if you look through your chart, you'll find them everywhere. That's why I stress the importance of using other concepts in conjunction with it, meaning your key support levels, your key resistance levels, order blocks, like I talked in my other YouTube video. And I'll actually leave a link to that video in this description, in the video description. Really important video and another key component to my strategy. But yeah, let's look at a few more examples though before I jump off here. All right, I want you to take a look at Tesla. I want you to take a look at Tesla. So this fair value gap right here, and I'm going to use resistance for an example, how you can use this in conjunction with resistance. 1, 2, 3. What did I tell you to find a fair value gap? You need what? You need 3 candles. 1, 2, 3. Take you want to use the wick, all right, not the body. You want to use the wick of the first one to the top wick of the third one for this example. Here's what you wouldn't do. So let me say what you wouldn't do. You're not going to take the body of the first one to the body of the third one like that. Don't do that. Use the wick, the very bottom, the wick to the top wick. You want to see nothing but body inside that. That's what you're looking for, nothing but body in there, okay? So we created a fair value gap right here. So I'm going to show you how you could use this combining your key resistance levels, because like I said several times in this video already, it's really not, or for me personally, I wouldn't take every fair value gap you see. That's, I mean, I don't think that's a very reliable strategy, but when you use it in conjunction with your key resistance level, it's very powerful, very powerful. So you can see price it gapped up this morning up into it, but we know pre-market isn't as volatile. So smart money, deep pockets, they're not going to get as many shares in pre-market. They're going to wait on the market open. There's more liquidity. So let's zoom in. Look at that. Look at how beautiful that is. We know that's our larger time frame level, larger time frame fair value gap in here. Combine that with this move higher up into it right at the opening bell, traded inside that larger time frame fair value gap. What happened? Slammed lower, just completely slammed lower. All right. And well, there's an order block, but I'm not going to get into that in this video. But beautiful move off of it. All right, same deal with AMD. It's pretty similar play to Tesla. What do you got in here? 1, 2, 3. 3 candles. Take the very bottom wick to the top wick. You got a fair value gap in there. Combine that with your key resistance levels, in this case being these pre-market highs. Look at that. I mean, it doesn't get cleaner than that. That's your larger time frame level. So it's smart to use a larger time frame level and then, kind of zoom down to your lower time frame for execution. That's your larger time frame level. Combine that with your key level of resistance. Pre-market highs is your key level of resistance. Okay. Look at that. Popped up at the open, slammed lower. Pre-market high resistance, fair value gap filled completely right there. Popped up, filled it completely. I get that it popped up in pre-market as well, but like I said, pre-market, not as much volume being traded. Deep pockets, they're gonna wait on they're gonna get most of their shares where they want once the market opens. Okay, so I mean, look at that easy short, or like I said, for you option traders, that's you could have grabbed puts up here on that break above pre-market highs, took it lower, or you could have waited for this retracement. Like I said, you get another move up into that. At this point, already been filled. But you actually got an order block in here, but I'm not going to get too sidetracked. You could have grabbed it up here as well. Boom, grab the move lower. Super clean play. I mean, doesn't get much cleaner than that. All right, one last example. I think at this point everyone kind of understands. But I'm going to use this is I caught a nice winner on CELC today. So you actually had a few fair value gaps in here, but obviously it kind of violated this first one right here, but we're still going to go over it since it's useful for the example. Here, I'm just going to clear my levels off real quick. I don't want y'all to be too distracted. Right here. This was the first one. 1, 2, 3. 1, 2, 3. Remember, 3 candles. Take the top wick to the bottom wick. Not a huge imbalance, but it's still an imbalance. You can see, boom, it filled that right there. So like I said, it kind of violated it. But what you need to notice is you had another one right below it. See that? 1, 2, 3. That's what it was being drawn to, not this one. So you need to really analyze it. See, 1, or you're gonna take the top of the first one to the bottom of the third one, right there. And if you also notice, you got your pre-market highs in here. You got VWAP, filled that imbalance, and there's the pop. So, like I said, I even caught a really nice winner on this one today. So this is eventually, oh, and also whole number support, $2 was that whole number support. So that's what I'm saying. Stress the importance of using these in conjunction with other concepts, your key support and resistance and order blocks, all that good stuff. Okay. If you do that, it is super powerful, super powerful. So 1, 2, 3, no wicks, no retest, nothing but candle, straight up imbalance, filled it, reversal. And that about covers it. So hopefully you found this video useful. And yeah, I'll see you later.